Well, hello everyone, and welcome back to Man and Machine here with the PeakBot team, episode 143. And of course, Mark from Harvested Financial. Gentlemen, coming off of a long holiday weekend, happy 4th of July, happy 249th birthday, right? To the United States. I think next year's a big one. So, gentlemen, how we doing?
Doing good. Long weekend, lots of family, lots of fun. Had a good time.
A lot of barbecue, right? I would hope.
Mark, what was your barbecue item of choice this weekend?
I was at a party where the host did a 25-hour Wagyu brisket.
I want to go to your kind of parties.
It was tasty.
Oh my God. Yeah, I can imagine. I was ready for like a pretty impressive answer, but I was not ready for 25-hour Wagyu. So was it as good as it sounds?
Oh yeah.
Okay. I mean, can't be bad.
Can't be bad.
Wow. Okay. Excellent.
That's
Ben,
tasty. What about you folks?
Yeah. What about you?
Crazy thing. I don't think I actually had any barbecue.
Oh my God.
Yeah, it was all ordered food.
Wedding
I think
food.
everybody was just in a rush this weekend, right? Like nobody was taking the time to actually man the grill, if you know what I mean. So I don't
I'll tell you,
barbecue.
We were at a wedding, Ben. I'll say this. Normally with wedding foods, I'm nervous. First sit down, I'm like, okay, the chicken's going to be the chicken. And if it's not dry, I'll be happy. And if the filet or the steak or whatever is any good, then I'm happy. It was good. It was really good. I had a really good filet. My wife got the chicken marsala, I think. So that was good. I had a chili cheese dog. A couple. When I say I mean a few chili cheese dogs this weekend. So that was like my highlight. That's one of my favorite things on the planet. Very American, very fitting. And if you're going to do it, then that was the time. But anyway, hope everybody else enjoyed their holiday weekend. We got a full week, right? Yeah, there's nothing else getting in the way this week. I think we got a full week of trading and a lot to get to on today's show. So, of course, we'll be talking about stocks in real life. We've got a good one. I think Ben have already constructed a trade idea, at least based on what he told me backstage. Certainly not financial advice. Then we will be talking about stop losses, specifically how they're built for our King Condor strategy, which has been, of course, our favorite strategy as of late. So we'll get into that and more in today's episode. So, fellas, let's get going. What do we got first? Stocks in real life. Getting ready to do it?
Let's do stocks in real life. Yeah, we're going to talk about Campbell's. I just call it Campbell's soup.
Yeah,
that I'm sure there are other products that Campbell's makes, unless they just built an entire company off of soup, which they might have.
So at least my Google AI answer, where I clicked dive deep to tell me more about the Campbell's company products, we've got some good ones on here. Okay,
let's hear it.
By the way, they're not just in the soup game. And when you say Campbell's, Ben, you say Campbell's soup. I almost can't say Campbell's without saying Campbell's chicken noodle soup. Like that whole thing almost wants to come out. First of all, before we get into the products, which I think will be fun because there are some good ones outside of the soup aisle here that they got their hands on. Did anybody grow up on Campbell's? Is anybody here a Campbell's family? Yes or no? No wrong answer here.
I wouldn't say Campbell's family, but we had it in the house.
We had it. You had it. If you needed it, it was there. That was kind of me. I wasn't a big soup kid growing up.
Yeah.
Ben, I have one friend, and Ben and I grew up together. I have one friend in mind, very close to up the street from us, who had endless amounts of soup. Like the world was ending. Campbell's soup to the gills, stuff to the gills. Anyway, Mark, what are your thoughts on Campbell's as a business, as their products? What are we thinking?
I had the same question as you. If they did anything other than soup, but it's not, you can take that soup a couple different dimensions. And I think kind of where, you can have your straight chicken noodle soup, but they also have their whole like range of recipes that you can use that soup for. Like take that cream of mushroom and turn it into like, the base for like a beef stew or something like that. There's a lot more than you can do than just eat that soup out of the can.
It's a great point. One of my favorite dishes that I make is a beef stroganoff, and I believe I use Campbell's cream of mushroom soup.
Oh, that must be what I'm thinking of. Yeah.
Yeah. I think that's what I use. So since you guys are both curious, I'm going to give you guys at least the high level of where they are. So they have their soups. Okay, all types of soups. In fact, condensed soups, ready-to-eat soups, snacking soups. But here's where it gets good. Baked goods, Pepperidge Farms. That's a Campbell's company.
Oh, okay.
Okay, so
That
now
must
we're
have been an
talking
acquisition.
goldfish. Okay, whoa. Milano cookies. Let me tell you, I don't know the last time I had a Milano cookie, but from about 15 years of my life, if I got my hands on those, I was eating the whole bag. Beverages. V8.
Should have had a V8.
So a whole lot of V8. I love their strawberry banana one. And then they have sauces naturally, I guess, right? So Prego, Pace wants some Rayo's, which is a bigger name, almost in the red shelf in the grocery store. I think that was considered like a...
That was a recent acquisition by Campbell's.
Oh, really?
And there was a lot of uproar in the pasta sauce community because they were afraid that Campbell's was going to ruin Rayo's great taste.
All right. By the way, did you pronounce it correctly?
I was going to ask you that. I thought it was just Rao's.
I thought it was Rayo's. Oh boy, Ben put some extra something on it.
I don't know how to pronounce it.
All right.
I have no idea. Look up a YouTube video.
We'll
That's what I do when I don't know how to pronounce things. I'll just like Google or I'll go on YouTube. I'll type in that word and I'll wait for somebody else to say it.
That is so funny.
Okay, the pasta sauce, according to AI, the pasta sauce brand Raos is pronounced Rayo's.
Oh,
it is not pronounced Rose or Rouse.
Rayo's. Okay. All right. Well, yeah, I'll take that W. I'm just seeing if they have anything else on here, but Campbell's has their hands across the grocery aisles, and very interesting. So let's get into the stock. Truthfully, I hate the ticker CPB. I'm just not thinking Campbell's.
Thinking Customs and Border Patrol.
Yeah, that does come to mind first.
What does CPB mean?
Well, it has to be, let's find out. I'm going to assume like Campbell's products. Okay, what does CPB stand for with Campbell's?
I've got the chart up here. Campbell's has just been on a slide for almost a year now. We'll get into that.
I don't know why it's CPB. I'll find out, but let's not worry about it. Let's talk about this slide. What are we seeing here?
I mean, it looks like from last September all the way till now, Campbell's has lost, call it 40% of its value. Don't know what could be driving that. I would think with the Rayo's acquisition, Rayo's acquisition, that might have like boosted it. Maybe that happened right around here. Short-lived pump right there, and then just continue to slide. And actually, this is where my trade idea came into play. If we take a look at, the past 10 years here, we are at a 10-year low at this moment. So in my brain, I'm saying a company that's as old as Campbell's, which we should look up the IPO date because I'm probably like super, super early 1900s. But with a company as old as Campbell's, I'm thinking something's got to give at this point. And the trade idea for me, at least, is just a simple, let's buy some shares and let's collect this quarterly dividend here.
What is the dividend?
I was just looking that up. Looking at that history, they currently, based on the forward yield or current price, forward yield is like 5%.
Yeah, not too bad. I mean, you could pick up a share right now for $31, and then you're collecting 39 cents every quarter. That's
It's not making
That's
up for
not
the equity value,
Slide.
but
yeah, right. But if we're at a 10-year low right now, it's like, how low can you go?
So yeah, the lowest they were, and maybe I'm not looking at this correctly. I'm seeing in 2018 they were down at $26. So I don't want to like invalidate you, but I think they had a low.
2016? That's not right.
All right, here, let me show my screen. Let me just see if I'm going absolutely nuts. All right, let's just do that quickly. So let's remove that. Let's pull this up. Am I looking at the wrong thing? So here's 2018, okay, 2019, down at $26.
I'm very confused now.
aren't you guys
Mark, we need a third party, dude. Was Campbell's at $25 or $26 a share in 2018, 2019?
Was there a split and one of our charts is not adjusted for it?
I'm looking at it on the NASDAQ.
I don't see. To get back to 2018,
We're both on TradingView, right, Ben?
Yeah. Here we are.
2018, I see lows in like the 32 area.
Yeah.
I wonder
mean,
if one of you must be dividend adjusted.
My whole life is being thrown for a loop right now. What am I supposed to know to be true now? This is brutal.
Yeah, Mark's right. It's probably has to be dividend adjusted.
All right, so I'll have to talk to my people, and I'll get adjusted.
Like-
I'll get an adjustment.
40 cents times $1.60 times 7 years. You know, that could. It probably actually hasn't been 40 cents all those 7 years, but like if you're roughly $7 off.
Okay. All right.
Actually, going back to all the way from what I can see here, it was 30 cents back in 2013, 2015, 2016, 2017 bumped up to 35 cents. So they've been consistent with their dividend.
I will say that's one of those things, you know, often people want to like hunt for stocks based on dividend yield or dividend whatnot. Like it's definitely like that can be a good screener tool. And like I definitely use it sometimes, but you got to be careful about what's happened in the equity value here, right? Like if you've just been sitting on this for your dividends, your balance is consistently bleeding.
Yep.
Yeah.
So I wonder if there's any bright side for Campbell's here. The technicals are a very strong sell, as you can imagine. I'm looking at an analyst ratings, not on screen here, but Ben, you can throw it up there. What's interesting on this is there's not a single analyst rating, or at least if you're looking at the 1-year forecast there. Normally you see a little bit of red on this screen, but projections are saying maybe nothing but up, but who knows? A lot of people are just saying hold it, at least from these analysts, it seems. So, all right. So Ben says, I guess jury's still out. We're going to go with your data that it's at an all-time, 10-year low, and that they're paying a pretty nice dividend. Maybe get in there and hope for the best.
That's what I'm saying. That's what I'm seeing. That's what I feel.
Do you think do you think Campbell's is sold worldwide? And we'll move off of Campbell's here in a minute. But my thought process is in the summer, I'm purchasing way less Campbell's products than I am when it's cold out in the fall and the winter. You know what I mean? They have at least for their soup, which maybe
It's probably season. Yeah, that's probably why they actually bought other food brands.
Need to.
So they're not going to be seasonal.
I want Goldfish and Milanos always.
Yeah.
There's no seasonality for that.
Dillon, you didn't happen to look up an IPO date, did you?
Oh, I did. Any guesses?
Okay. I'm gonna guess They did well during the Great Depression. So I'm going to go with the 30s.
Mark?
I was looking at them a little bit before, and I did see that they've been around since like the late 1800s. So it's a question of like, when did they actually go IPO? I'll go later. I'll say 62.
Okay. So Mark's not far off. Ben, you're a little early. It is 1954, November 16th of 1954. They IPO'd. Trying to get a price here, not seeing one, but yeah. So Mark, not too far off there. So yeah, I hope that they can turn it around. I'm here rooting for Campbell's. I'm not going to take that trade, but who knows? Any other thoughts on Campbell's before we move on?
I mean, honestly, we're looking at a 15-year low right now. I just looked up when the last time was that we were at this point. It was 2011. I might buy 100 shares of Campbell and just ride with it, collect those dividends.
Okay. And if you do it, just record it and post it on our socials. All right.
Yeah, we'll see.
All
It's
right.
not really a PeakBot style trade.
No, it's not. And you guys have ruined my day here with this whole 15-year low, because I'm just seeing it. I'll figure out my charts, but
Not a lot of liquidity in the options. Like the front weeklies have some action, but like they only have $5 strikes if you go out to August. Or sorry, November has 5.
Yeah. What's an at the money put, like a leap, call it like a year out from now? What's that going for? Like at the $30 strike?
So June 18 is listed. It's a pretty wide market. 235 at 310. So maybe you're paying 280 for that thing, 270.
Interesting. And then the dividends will theoretically pay you back about $1.60 of that. So you would have to count on about another $1.70-ish of appreciation to make some money there. Yeah, maybe not the best play if you were to buy puts.
I'm glad
the weekly calls have some juice to them. Like if you want to constantly be overwriting this.
Yeah, you'd have to probably do like the 35 strike, right? If it's only 5 increments of $5.
So they do have dollars more near term.
Okay.
So you could sell the 32, the next July 18th, the regular, I guess that's the regular expiration. The 32 is like 20-cent bid. It's not a ton of juice, but
okay. Yeah, it's not, but ideas. These are all ideas.
Okay. So I would say that from a time standpoint, maybe we move into stop losses, specifically around our King Condor strategy. What do we think, guys?
Yeah.
All right.
Let's do it. We will get into the bot shop segment. So we have been covering King Condor for the past 6 weeks or so, covering a variety of different indicators and parameters that we're using to make sure that King Condor is always performing at its peak. And today we're going to be talking about the different levels of stop losses that we have. And then next week we'll talk about trailing stops, and then that kind of wraps it up for King Condor. Then we'll take all of these weeks of videos, we'll compile it into one video, and then we'll have just big King Condor, what it is type summary for everybody to see. Then we'll move on to our next bot. We'll have to decide if we want to do the Ben bot or if we want to do Shorbo next. We'll figure that out. But for now, at least, we're going to be talking about stop losses, because stop losses are a very important part of this strategy, and they only occur on the day of expiration. So again, this is the base that we're working off of, right? And we're going to update this. Actually, no, we won't update this because there's only 2 sessions left. This data is about, I don't know, going until May of this year. So we've got some more data we could throw in here, but let's keep the numbers consistent week over week. This is our base. Remember, these are our key numbers up here to keep an eye on. And before we look at any comparisons, Mark will talk us through the pros and cons of not having a stop loss for this strategy, having a moderate stop loss, which is what we do have for this strategy, and then having an even tighter stop loss for a iron condor strategy. So I'll zoom in a little bit here. And Mark, why don't you take it away, talk about pros and cons of not having a stop loss.
Yeah, for sure. So stop loss is taking a big step back. I would say these are after setting a spread width, which is an absolute truth. The best way to kind of risk manage a trade is to include a stop loss in there. And the goal of a stop loss is exactly like it sounds. You want to stop the loss on a position. So the extent that you enter at a given price, you would set a stop loss typically as a dollar amount or as a percentage away from that initial price. And this is a way for you to risk manage your position and say, oops, I was wrong. This position's going against me. I want to control my, maximum exposure here. And so while it's not quite as effective as actually having spreads, there's still some, or actually having, the strikes as your limiting risk factor. Having a stop loss still needs to go into the market and execute. There's still some potential slippage, but it does allow you to control that bleed on a position that's moving against you. So on the no stop loss paradigm, you're obviously just letting the trade work. You're saying, okay, it might be zagging against me now, but I'm allowing that to work for me, especially in a credit spread. You're giving time, the benefit of time working for your position. You're not paying any transaction costs if you don't use a stop loss. So there are some benefits to not using a stop loss. But on the other side of things, you are going to see bigger bleeds, of course, and larger, risk. If you have no stop loss on an equity position, you go to zero. So no stop loss, obviously you're keeping more risk on the table and you do get paid to some degree for that. To the extent that you do choose to enter into stop loss, this is really where it gets into a balance between that allowing time to work versus being very tight about your position. And, when thinking about this in the context of an overall trading strategy, you want to make sure that the amount that you're winning isn't getting clipped off by the amount that you're consistently losing. And we all know markets can wiggle. So having too tight of a stop loss, potentially stops you out early. Whereas moderate to larger stop losses, of course, you have the risk of wearing that whole position. So overall, knowing what that stop loss is a great way to, think about this in a back test, think about this in terms of exposure going forward. Again, I'll caveat that you still have to execute against that. So you might get worse than your actual stop loss, but you can use tools, and we use tools like with when we enter in orders with the broker, such that something can immediately stop when the broker sees that tick. You don't necessarily have to wait for your systems. So there are tricks to better manage stop losses no matter where you set that. And generally keeping this kind of parameter in your trading strategy allows you to kind of override some of the emotional decisions you might be making. Knowing that you have a stop loss in there, you're less inclined to say, see something bleed against you and, second guess yourself. But the stop loss is sort of a cognitive repair there to help keep you, on track and on strategy. So, really when it comes down to it, and this is where we spend a lot of time looking at the back tests and the results, is that we want to balance that wiggle that might happen and stop you out even on a position that might be profitable, but also prevent, the worst case scenario from happening. Because at the end of the day, as much as we can filter on environments, as much as we can kind of get into good odds on scenarios, once you have a position on, you still do have to manage that and things can go awry. And I think some degree of a stop loss is really beneficial to being able to capture bigger risk while also being able to manage that same risk.
Mark, I like the comment you made about and we can get philosophical here about absolute truths, right? But the absolute truth of the spread being your total stop loss, that's key, because that does come into play on this strategy, particularly overnight, right? Because we're setting up a 1 DTE iron condor with this strategy, and if SPX moves too far in either direction overnight, well, that stop loss is not going to do anything while the market is closed, right? So there's nothing that we really can do if we're just trading SPX options, because we cannot trade those outside of mostly outside of market hours. So that part is key. And I think a couple of weeks ago, we looked at the width of the spreads that we were selling on this condor. And we looked at the difference between 5 wide, 10 wide, and 20 wide. We did end up on 10 wide, which gives us, we feel, the best balance for risk and reward, and having that absolute protection to the downside. So that does come into play for this strategy when there's a large gap up or down overnight. So let's take a look at results, unless Mark looked like you were about to say something.
No, I was just going to say, I think that no matter what kind of stop loss you have in place, like even if you have all the margin in the world and you can sell naked spreads, that like, I think, and you know, sell a put and have a stop loss on it, like you want to buy that lower leg put, and you know, keeping that spread width as your true ultimate stop loss, I think is really beneficial to your point about overnight moves, or, you know, sometimes the market slips fast and, you know, you're not always guaranteed an exit on a stop loss.
Yep. Absolutely. So this is what we're looking at. Again, this is our baseline right here. Remember these numbers at the top left: 25.6, 53.3, 6.7. Now that's with our moderate stop loss, stopping out anywhere between, call it $3 and $5. And that's what this bot is programmed to do. Now, if we look over at the no stop loss variation of this strategy here, we can see things change quite a bit. Right? Our P&L drops all the way down to just 8.2 thousand, which lowers our compound annual growth rate to just a measly 22.5%. I don't think anybody's going to complain about that either. But the curve doesn't look that great, right? Like you hit a couple of nice streaks over the past couple of years, but other than that, you're just chopping up and down. And actually, lately, it looks like you're declining a little bit. And then that drawdown increases tremendously from 6.7% to 24%. So you can see what the effects of not having a stop loss are on this strategy. And I don't like that, at least. I much prefer that curve on the left than that curve on the right here.
Yeah, absolutely. 100% needed. That needs to be posted on, like, pinned to our socials right there.
Yeah.
It's a very telling story.
So now on the opposite end of the spectrum, not having a stop loss going to having a very tight stop loss. And just for, demonstration purposes, I just chose $1.50 for each side of the condor, and that's what we were stopping on. I want to scroll here, but my trackpad's not letting me. All right. So remember those numbers. I'm going to try to zoom in over here. And again, changes the strategy a ton, the results a ton. The P&L drops all the way down to 8,000 again, about a 22% CAGR. The max drawdown doesn't increase too much. We are taking more losses because it's tighter stop loss. So the max drawdown goes up to 12.6%. And the win rate drops a little bit. Actually, that's something we didn't look at the last one. The win rate is normally 77.7% per leg. The win rate drops down to 57% per leg with a tight stop loss, but it increases to 83.8% on the no stop loss scenario. But either way, in both of these scenarios, not having a stop loss or having too much of a stop loss resulted in drastically different results and worse results. So I'd say that the stop loss levels carefully chosen, and we definitely did a lot of testing around those. Definitely a critical part to this strategy.
And with regards to the testing, this is one of those things that I think we're going to continue to optimize on, because you need to, you can say that, 350 worked in the past, or maybe 250 worked, that we want to test that it's robust around, relatively variable values, that knowing it works at 275 versus 3 versus 325, it helps kind of the p hacking concern there. But definitely, given market environments, this is one that I personally expect to see us continue to adjust with the King Condor.
100%.
Definitely.
Adapt or die. Excellent. So very helpful there. Obviously, it's intentional that we're spending this much time on the King Condor strategy. We want you all to understand how much goes into building a trading strategy, let alone a successful one, and all the different parameters that can make a big difference, as you guys saw in those equity curves there with the stop losses. So, Mark, Ben, thank you so much. I believe we can get to wrapping up here. I had one thing I just wanted to mention outside of this with my portfolio, an adjustment that I'm making. But it's not nearly as important as anything else we might need to talk about. So am I missing anything?
No, not much from the economic event standpoint this week. We got FOMC minutes on Wednesday. That's really all to note, honestly, from this week. Some bond auctions, so Max's bots will be off for those days.
Is King Condor off for FOMC minutes?
I don't think so.
Okay. Awesome. All right, so we'll keep a close eye on things. We should see a good amount of activity across the portfolios this week. Full week of trading. We'll see how. By the way, how are we looking pre-market?
I believe futures are down a little bit. Not like 15 points or something like that.
Yeah, small.
Okay. My update was I am changing my wheel stock. So in my portfolio, I've been wheeling Walmart for quite a while, and I'm certainly green on the position. I held shares for probably the last 6 months, anywhere from 98 a share all the way down to 83, but I just sold them at a break-even cost. Sold them at 98. When I say I mean our wheel bot. After being assigned the shares and selling combo spreads, sold them and collected a nice net premium over the last 6 months, knowing that I sold them for a break-even on the shares. Probably up, I'd say a couple $100, $300 or $400 on that. Point is, I'm ditching Walmart. I was taking a look at the wheel watch list, and I found a stock that I like. Regardless of the data and it getting updated this morning, I'm not going to have it change my mind too much. It's Uber. I'm moving into Uber on the wheel. All right. So what we're looking at here for the most part, what caught my eye was here's their monthly bars. Okay. Since July of 2022. So we're talking 3 years ago here. And then I'm almost going to ask Ben to see if he sees anything different on his chart now, because I'm all confused with TradingView. But point is, they've been in quite a sharp upward trend outside of some consolidation here, if that's what you want to call it, in 2024, early 25. So far this year, it's just been skyrocketing. It opened the year around $63, $65 a share. It's now trading pre-market this morning around $93.40. When I was looking at this on the watch list, it's collecting a decent amount of premium, more than I would collect on the wheel. All right. So again, we'll see what this says at the open, but around $44 in premium. That's probably $10, $15, $20 more than I'm earning per week on Walmart. We have a $3 spread here, so I don't hate that. I'm trying to stay over $91 a share, and I feel pretty good about that. Here's the dailies, and you can see my blue line represents $91 a share. Little bit shaky here in the month of May and June, but they've had great earnings. Again, when I look at the monthly here, this feels like a stock that I want to wheel if I have cash for it, and it's going to pay me about $40 a week. So I'm happy owning Uber if it takes a dip. Otherwise, I'm going to collect my premium. and just wanted to share that. So
Sweet.
new wheel stock for Delro here.
Very nice.
All right, guys. Anything else we should cover here today?
I think we're all set.
Awesome. Well, thank you so much for everybody who tuned in. Hopefully you have a great week of trading, a great week of weather wherever you are, and hope everything else is great for you. I'm getting the music to get out of here. So thank you so much. And as always, we'll see you at the peak. Take care.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.